Hey there, deep divers. Welcome back. You know how much we love a good deep dive, and today we're strapping on our virtual scuba gear and heading into the future. The future of Bitcoin, that is.
The future.
We're going on a fact-finding mission to see if those bold predictions for 2040 and 2050 hold water.
Okay.
Our map for this adventure: excerpts from Bitcoin Price Forecast for 2050. Key factors, predictions, and long-term outlook.
Right.
Buckle up. Think about it. Could Bitcoin really become a cornerstone of the global financial system? What about its potential impact on our daily lives? And let's not forget the big question. Will it actually be worth hundreds of thousands of dollars, as some predict?
Yeah, big question.
We're here to separate the hype from the reality.
Separate it out.
So let's get started,
All right, let's do it. It's true that Bitcoin has had a wild ride
to say the least.
from its launch in 2009 with a value of, well, nothing.
Nothing.
It's seen incredible growth and some truly dizzying drops.
Oh, absolutely. It's
Yeah.
like the financial equivalent of a roller coaster. One minute you're buying a pizza with Bitcoin when it's worth pennies. The next, it's hitting near the $20,000 in 2017. Then, as we all remember, it smashed records last month, going over $100,000.
Wow.
I mean, that kind of volatility makes you wonder what's really driving its value.
Yeah, you're hitting on a crucial point. That dramatic price action tells us a lot about how people view Bitcoin. It's not just a currency, it's a speculative asset, a technological innovation, and for some, a symbol of a shift in how we think about money and finance. It's that mix of factors that fuels those dramatic price swings.
Right. It's like a financial Rorschach test. Everyone sees something different in it. So let's try to decipher those ink blots, shall we? Our source points to three key drivers shaping Bitcoin's future: the number of users, overall crypto adoption, and those mysterious Bitcoin halving events.
Yeah, those are definitely key pieces of the puzzle. You can't ignore the basic principle of supply and demand. As more people use Bitcoin, the demand goes up,
Supply and demand.
which, as we saw this year with prices surging to $76,999, can push the price higher. But it's not just individual users, is it?
Not at all. We're seeing more and more businesses, big institutions, and even some governments dipping their toes into the crypto pool.
Right.
The launch of those Bitcoin spot ETFs earlier this year felt like a real turning point.
Absolutely. When you have Wall Street giants and institutional investors getting involved, it lends a level of legitimacy to Bitcoin attracting even more capital.
Legitimacy.
It's a bit of a self-fulfilling prophecy. The more mainstream it becomes, the more attractive it appears to those who were once skeptical.
Okay, so we've got user adoption and institutional interest. But what about those halving events? They always seem to send shockwaves through the market. Can you walk us through the mechanics of halving and how it impacts Bitcoin's price?
Okay, imagine it this way. Bitcoin is like a digital gold rush with miners competing to dig up new coins. But unlike a real gold rush where the amount of gold is unknown, Bitcoin has a fixed supply, 21 million coins.
21 million.
Every 4 years or so, the reward for mining a block of Bitcoin gets cut in half. This means fewer new Bitcoins are entering circulation, which in theory should make existing Bitcoins more valuable.
So it's like a built-in scarcity mechanism designed to increase value over time.
Yeah.
But does that always translate into higher prices?
That's the million-dollar question, isn't it?
Million-dollar question.
We did see a price jump after the April 2024 halving, when the reward dropped from 6.25 to 3.125 Bitcoin per block. But remember, market sentiment is a powerful force. If investors believe the halving won't have the desired effect, it might not translate into immediate price increases.
So the scarcity is real, but the price impact depends on how people perceive that scarcity. It's like a psychological game of chicken between the market and this pre-programmed code.
Exactly. And it gets even more interesting when you consider that the last Bitcoin is expected to be mined sometime around 2140. As we get closer to that point, that scarcity factor will intensify, potentially creating even more upward pressure on the price.
Wow, 2140. Okay, enough with the history lesson for now. Let's jump into our time machine and fast forward to the year 2040. What does our crystal ball, or should I say, our source material, say about Bitcoin's potential in that not-so-distant future?
Well, the source predicts that by 2040, Bitcoin will have gone far beyond its role as a simple digital currency.
Okay.
It envisions a world where Bitcoin is deeply intertwined with the global financial system, potentially powering innovative applications like smart contracts and decentralized finance, or DeFi.
DeFi. Now, that's a term that gets thrown around a lot these days, but honestly, I still find it a bit mystifying. Can you demystify it for us? And how does Bitcoin fit into this picture?
Okay, think of DeFi as a rebellion against traditional finance.
Broadly.
A movement to create a financial system that is open, transparent, and accessible to everyone. It leverages blockchain technology to cut out the middlemen, the banks, the brokers, the institutions, and puts the power back in the hands of individuals.
So it's like a peer-to-peer financial network powered by the blockchain. But where does Bitcoin come in?
Bitcoin could become the bedrock of this new financial ecosystem. Its blockchain, with its proven security and track record, could serve as the foundation for a wide range of DeFi applications. Imagine a world where you can borrow, lend, and trade directly with other individuals, all without relying on those traditional financial gatekeepers.
I'm starting to see the appeal of this DeFi world. But what about smart contracts? How do they factor into this equation?
Well, smart contracts are like self-executing agreements written in code.
Right.
They automate complex transactions, ensuring transparency and security without the need for lawyers or intermediaries. Imagine buying a house with a smart contract. The entire process, from verifying ownership to transferring funds, could be automated on the blockchain, making it faster, cheaper, and more secure.
Wow, that's a game changer. No more mountains of paperwork or waiting weeks for transactions to clear. So is there any evidence that this vision of a Bitcoin-powered DeFi future is actually achievable?
Well, the speed at which Bitcoin has evolved is remarkable. In just over a decade, it's gone from a fringe experiment to a trillion-dollar asset class.
Trillion.
The technology is constantly improving, and as more developers, entrepreneurs, and institutions embrace Bitcoin, the potential for innovation is immense.
Okay, you've definitely piqued my curiosity. But let's not get ahead of ourselves. We still have another decade to cover. What does the source say about Bitcoin's potential in the year 2050?
Now, this is where the predictions get really interesting. The source suggests that by 2050, Bitcoin could achieve mainstream acceptance, potentially becoming a cornerstone of the global financial system. We're talking about widespread adoption as an asset class, significant integration by institutions, and even potential adoption by governments as a digital reserve asset held alongside gold.
Hold on a second. Governments backing Bitcoin. Isn't that a bit far-fetched even for 2050?
It might seem like a radical idea today, but think about it. Governments are constantly seeking safe, reliable stores of value. As the world becomes increasingly digital and decentralized, it's not implausible that Bitcoin, with its limited supply and robust security, could be seen as a viable option for central banks looking to diversify their reserves.
That's a pretty dramatic shift in thinking. If Bitcoin were to become that widely accepted, what would happen to traditional currencies like the dollar or the euro? Would they just fade away?
That's a question that economists are debating right now. Some believe Bitcoin could coexist alongside traditional currencies, offering an alternative for those seeking a decentralized, censorship-resistant store of value. Others envision a future where Bitcoin gradually replaces some fiat currencies, ushering in a new era of digital finance.
So we could be on the cusp of a major financial revolution. This is pretty mind-blowing stuff. But let's bring it back down to earth for a moment. If this vision of Bitcoin in 2050 were to come true, what would it mean for everyday people like us?
Imagine a world where you can seamlessly use Bitcoin for everyday transactions. You could send money across borders, instantly access a wide range of financial services without needing a bank account, and participate in global markets directly. It could be a world with greater financial freedom and control.
But wouldn't that also mean more risk? I mean, Bitcoin has a reputation for being incredibly volatile.
There's no denying the volatility. But as Bitcoin matures and the infrastructure around it develops, we might see that volatility decrease. Plus, as with any investment, diversification and a good understanding of risk management are essential.
It sounds like Bitcoin's future is a bit of a wild card, full of potential, but also shrouded in uncertainty.
You've hit the nail on the head. And that's what makes this exploration so fascinating.
Yeah.
We're venturing into uncharted territory, trying to make sense of a technology that could reshape our world in ways we can only begin to imagine.
Well, we've covered a lot of ground in this first part of our deep dive, from Bitcoin's turbulent past to those intriguing predictions for 2040 and 2050. Before we move on to the specific factors shaping Bitcoin's value, I think it's time to take a little breather.
Sounds like a good plan. Let's give our listeners a moment to digest all this information. We'll be back soon to delve deeper into the forces at play and explore the evidence for and against those bold predictions. Stay tuned, deep divers.
Welcome back, deep divers. Ready to plunge back into the fascinating world of Bitcoin. We left off with some pretty mind-blowing predictions for 2040 and 2050. A world of decentralized finance, smart contracts, and even governments holding Bitcoin.
It's going to be
I
wild.
don't know about you, but I'm eager to unpack those predictions a bit further. Let's start with 2040. Our source paints a picture where Bitcoin isn't just a currency, but a fundamental part of how we interact with the financial world.
Yeah, a fascinating scenarios, isn't it? Imagine a world where you don't need a bank to get a loan, invest your savings, or send money across borders. That's the promise of decentralized finance, or DeFi for short. A system built on the idea that financial power should be in the hands of the individual, not centralized institutions.
Okay, I'm all for giving the little guy more control, but I have to admit the technical side of DeFi still feels a bit like a black box to me. How does it actually work, and where does Bitcoin fit in?
Okay, let's break it down. DeFi leverages blockchain technology and specifically smart contracts to create a kind of parallel financial system. These smart contracts are essentially self-executing agreements written in code that can automate complex transactions.
So instead of relying on banks and lawyers to handle things like loans or property transfers, we could have these smart contracts doing the heavy lifting all on the blockchain.
Exactly. And Bitcoin's blockchain, with its proven security and track record, could be the perfect platform for these DeFi applications. Imagine borrowing money directly from another individual with the terms of the loan coded into a smart contract that automatically enforces the agreement.
Wow.
No need for a bank, no need for piles of paperwork, just a secure and transparent transaction on the blockchain.
That sounds incredibly efficient, but also a bit intimidating. What if something goes wrong with a smart contract? Is there any safety net?
Yeah, that's a valid concern. DeFi is still in its early stages, and there are definitely risks involved. One of the challenges is ensuring the security and reliability of these smart contracts. A single error in the code could have significant consequences. But as the technology matures, we can expect to see more robust security measures and safeguards put in place.
So it's a bit like the Wild West of finance right now. Exciting potential, but also a lot of unknowns.
Yeah.
What about real-world examples? Are there any DeFi applications built on Bitcoin that are actually being used today?
Well, there are a few projects exploring this space, although it's still very early days. One example is the Rootstock platform, which aims to bring smart contract functionality to Bitcoin's blockchain. This could open up possibilities for decentralized lending, stablecoins pegged to Bitcoin's value, and even more complex financial instruments, all built on the security of the Bitcoin network.
So we're just scratching the surface of what's possible with Bitcoin and DeFi. It sounds like 2040 could be a very different financial landscape. But let's jump ahead another decade to 2050. Our source makes an even bolder prediction for that year. Bitcoin becoming a cornerstone of the global financial system, potentially even adopted by governments as a reserve asset.
That's right. It's a prediction that challenges our current understanding of how the financial world works. To see Bitcoin, which started as a decentralized, anti-establishment movement embraced by the very institutions it was designed to disrupt, would be a remarkable turn of events.
I'm trying to wrap my head around it. What would drive governments to adopt Bitcoin? Wouldn't that undermine their control over monetary policy?
It's important to remember that governments, just like individuals, are always looking for ways to protect their wealth and ensure financial stability. As the world becomes increasingly digital and the limitations of traditional fiat currencies become more apparent, Bitcoin's unique characteristics might start to look more appealing.
What characteristics are we talking about?
Bitcoin's limited supply, for one. Unlike fiat currencies, which can be printed at will by central banks, Bitcoin has a fixed cap of 21 million coins. This makes it resistant to inflation, a quality that could be very attractive to governments facing economic uncertainty.
So it's like a digital gold, a safe haven asset in a world of volatile currencies.
Yeah.
But what about Bitcoin's decentralized nature? Wouldn't that make it difficult for governments to control?
Well, that's the paradox, isn't it?
Yeah.
Bitcoin's decentralized nature is both its strength and its weakness. Governments might be hesitant to embrace a currency they can't fully control, but at the same time, that lack of control could be seen as a guarantee against manipulation and censorship. It's a balancing act that governments will have to weigh carefully.
I can see how this could be a very appealing proposition for some countries, especially those with weak or unstable currencies. But wouldn't this create a two-tiered financial system with those who embrace Bitcoin having a distinct advantage?
Yeah, that's a valid concern. The adoption of Bitcoin by governments could create significant economic disparities. Countries that resist adoption might find themselves at a disadvantage, potentially even facing financial instability as their currencies lose value against Bitcoin.
So it's not just about the technology itself. It's about the geopolitical and economic implications of a world where Bitcoin becomes a dominant force. This is some heavy stuff.
Absolutely. We're talking about a potential paradigm shift in how we think about money, finance, and even global power dynamics.
Okay, before my head explodes from all these possibilities, let's bring it back down to the individual level. If this vision of Bitcoin in 2050 were to come true, what would it mean for someone like me?
Imagine a world where you have seamless access to financial services, regardless of where you live or your economic status. You could send money across borders instantly and cheaply, borrow and lend money on your own terms, and even participate in global investment markets without needing a traditional bank account.
Okay.
It could be a world with greater financial freedom and control.
That sounds incredibly empowering. But wouldn't that also mean taking on more responsibility for managing my own finances?
Definitely. In a world where individuals have greater financial freedom, they also bear greater responsibility for their own financial well-being. It would be essential to educate yourself about the risks and opportunities and to develop strong financial literacy skills.
So it's a trade-off, greater freedom, but also greater responsibility. But that's kind of the theme of Bitcoin, isn't it? It's about empowering individuals to take control of their own financial destinies.
Exactly. Bitcoin represents a shift in power, a move away from centralized institutions towards individual agency. Whether that shift ultimately leads to a more equitable and prosperous world remains to be seen, but it's certainly a force to be reckoned with.
Well, we've covered a lot of ground in this second part of our deep dives, from the potential of DeFi and smart contracts to the mind-boggling idea of governments holding Bitcoin as a reserve asset. Before we move on to the specific factors that could shape Bitcoin's value in the coming years, let's take a moment to reflect on what we've learned so far. What stands out to you as the most significant takeaway from this exploration of Bitcoin's potential in 2040 and 2050?
For me, the key takeaway is that Bitcoin represents a fundamental challenge to the existing financial order. It's a technology that has the potential to disrupt everything from how we make payments to how governments manage their economies. Whether that disruption will be positive or negative remains to be seen. But it's clear that the world of finance is undergoing a profound transformation, and Bitcoin is at the forefront of that change.
That's a powerful insight. It's not just about the price of Bitcoin, it's about the potential for a fundamental shift in power and control. In the next part of our deep dive, we'll explore the specific factors that could determine whether Bitcoin lives up to its potential or fades into obscurity. We'll analyze the regulatory landscape, the technological advancements, and the broader economic forces that will shape the future of this revolutionary technology. So stay tuned, deep divers, because the journey is just beginning. Welcome back, deep divers. We've explored Bitcoin's turbulent past, delved into those mind-blowing predictions for 2040 and 2050, and now we're ready to tackle the final piece of the puzzle, the factors that will ultimately determine whether Bitcoin sinks or swims. We've talked about the potential for Bitcoin to revolutionize finance, even disrupt governments. But let's be real, there's some serious hurdles to overcome, right?
Absolutely. Bitcoin's future is far from guaranteed. It faces challenges on multiple fronts: technological, regulatory, and even environmental.
Speaking of environmental challenges, that's one area I'm particularly curious about. Bitcoin mining has a reputation for being an energy hog. How does that square with the idea of Bitcoin as a force for positive change in the world?
Yeah, it's a valid concern. Bitcoin mining does consume a significant amount of energy, and there's been a lot of debate about its environmental impact. But it's not a simple black and white issue.
Okay, let's unpack that a bit.
Yeah.
Where does all that energy go, and what are the potential downsides?
So Bitcoin mining is essentially a massive decentralized computational puzzle. Miners around the world are constantly competing to solve complex mathematical problems, and the first one to find the solution gets to add a new block of transactions to the blockchain. The process requires a lot of computing power, which translates into high energy consumption.
So it's a bit like a global digital arms race, with miners constantly upgrading their hardware and consuming more and more energy to stay ahead of the competition.
That's a good analogy. And the concern is that this energy-intensive process is contributing to carbon emissions and putting a strain on power grids, especially in regions that rely on fossil fuels for electricity generation.
So it sounds like a potential environmental disaster in the making. Is there any hope for a more sustainable approach to Bitcoin mining?
Well, there are several developments that could mitigate the environmental impact. One is the shift towards renewable energy sources for mining. As the cost of solar and wind power continues to decline, it becomes more economically attractive for miners to use these cleaner energy sources.
So Bitcoin mining could actually become a driver of renewable energy adoption. That's an interesting twist.
Yeah, it's a possibility that some experts are quite optimistic about. There's also the potential for technological advancements that could make mining more energy efficient. For example, some developers are working on new mining algorithms that require less computational power.
So it's not just about switching to renewable energy sources, it's also about making the mining process itself more efficient.
Exactly. And then there's the impact of those halving events we discussed earlier. As the reward for mining decreases over time, it reduces the incentive to use the most energy-intensive methods.
So it's like a built-in mechanism for promoting energy efficiency. The less Bitcoin is worth mining, the less energy miners are willing to expend to get it.
That's the idea. Of course, it's a complex issue with many factors at play. But the key takeaway is that the environmental impact of Bitcoin mining is not set in stone. There are potential solutions on the horizon, and the future of Bitcoin doesn't have to be at odds with a sustainable future.
Okay, that's reassuring to hear. But what about the regulatory landscape? Governments around the world seem to be grappling with how to approach Bitcoin. What are some of the key regulatory challenges, and how could they impact Bitcoin's future?
Regulation is definitely one of the biggest wildcards in the Bitcoin game. Different countries are taking vastly different approaches, ranging from outright bans to enthusiastic embrace. This creates a lot of uncertainty for businesses and investors operating in the crypto space.
What are some of the key areas where governments are focusing their regulatory efforts?
One major focus is on anti-money laundering and combating the financing of terrorism. Because Bitcoin transactions can be pseudonymous, there's a concern that it could be used for illicit activities. Governments are implementing regulations to track transactions and identify users, which some argue undermines the privacy and decentralization that are core to Bitcoin's philosophy.
So it's a classic tension between security and freedom. Governments want to prevent crime, but at the same time they risk stifling innovation and encroaching on individual liberties.
Exactly. And then there's the question of taxation. How do you tax a decentralized global currency that doesn't fit neatly into existing tax frameworks? Governments are still trying to figure that out, and the outcome could have a significant impact on the adoption and use of Bitcoin.
It sounds like a regulatory minefield.
Yeah.
What advice would you give to someone who's considering investing in Bitcoin, given all this uncertainty?
The key is to stay informed and do your research. Understand the regulatory landscape in your own jurisdiction and be aware of the potential risks and rewards. The crypto world is evolving rapidly and regulations are constantly changing. It's essential to be adaptable and prepared for the unexpected.
So it's not just about understanding the technology, it's also about navigating the legal and regulatory complexities. What about the broader economic landscape? How might global economic trends impact Bitcoin's future?
That's a crucial question. Bitcoin is often seen as a hedge against inflation, a safe haven asset in times of economic uncertainty. If we see a continued rise in inflation or a decline in the value of fiat currencies, demand for Bitcoin could increase, potentially driving up its price.
So a shaky global economy could actually be good news for Bitcoin investors.
It's a possibility. But it's important to remember that Bitcoin is still a relatively new asset class, and its behavior in a major economic downturn is untested. Some analysts believe it could perform well as a safe haven, while others predict it could crash along with other assets.
So once again, it's a bit of a gamble. But isn't that part of the allure of Bitcoin? It's a high-risk, high-reward proposition that appeals to those who are willing to bet on a future that's radically different from the present.
There's definitely an element of that. Bitcoin represents a break from the traditional financial system, a bet on a more decentralized and democratized future. Whether that bet will pay off remains to be seen.
Well, we've covered a lot of ground in this deep dive into Bitcoin's future. We've explored the potential, the challenges, and the uncertainties that lie ahead. As we wrap up, I want to come back to our listener. If you've been following along on this journey with us, you've heard a lot of information, a lot of predictions, and a lot of speculation. What should you take away from all this? How can you apply this knowledge to your own life and your own financial decisions?
That's the million-dollar question, isn't it? I think the most important takeaway is that the future is not predetermined. We have agency, the ability to shape the world we want to live in. Bitcoin is a powerful tool, but it's just that, a tool. How we use it and whether it ultimately leads to a more equitable and sustainable future is up to us.
So it's not just about understanding Bitcoin. It's about understanding ourselves and the values we want to see reflected in the world we create. That's a powerful message to end on. Thanks for joining us on this deep dive into the fascinating, complex, and ever-evolving world of Bitcoin. We'll be back soon with another intriguing topic, ready to uncover the hidden gems of knowledge and share them with you.